Well, my friend, over the last month, oil has already dropped by 30%. And I'll tell you more, this isn't the limit. The most interesting thing is that right before the drop, I posted my last video and gave a simple, clear signal that you could have profited from. If you did that, then congratulations. So, in this video, my goal is to update the information on what's happening now, what the targets are below, possible trajectories, and how to profit from it. We'll talk about the short-term option and the medium-term one. I'll show all of this on the chart, so let's not waste time and dive right in. So let's briefly recall the triangle model where it all started. The discussion was, if you remember, that as soon as the last component of the triangle is completed, the so-called E wave, we would then see a fairly significant decline. And then, as the main target, I mentioned the 82 level, which has now been reached for Brent, so it's time to think about what's next. And for that, I suggest taking a look at the current markup. Here on the chart is my current trade, which is currently active. I'll tell you everything in order. So look, the decline should happen in a three-wave pattern. That is a standard classic three-wave that we can see on the chart. There's our high point. There's the first movement. The correction is formed by a triangle, and the further decline should be an impulse, a five-part move. 1, 2, 3, 4, 5. So, as you can see, the third wave is now developing, which is quite easy to interpret on the indicator. It has no divergence, meaning it's the minimum extreme, so to speak, throughout the entire decline. Accordingly, to say more precisely in global terms where our decline will end, we can take two paths. First, if we look at the weekly chart, then in this case, given that we've passed the Fibonacci level, I'd focus primarily on the volume zone. The nearest significant volumes are at the $63 to $70 per barrel marks. And actually, in this case, the red scenario is still relevant. If we hit, say, 70 and start to turn around. However, now, on June 17th, 2026, it's time to put out a feeler and say that the gray scenario you see on this chart could also happen. And we'll talk about it a bit later in future videos as soon as the prerequisites for it appear. Nevertheless, besides the volume zone around 70, I want to draw your attention to the actual markup. Once again, we'll say that our decline should move in a five-wave pattern, which means our task is to jump out on the final fifth move. A little bit of an educational part. When our five-wave move is forming, at the completion of the third move, we see a peak on the MACD indicator, and then within wave 4, we get a pullback to the zero line. Accordingly, the fifth move forms with a divergence, and that's an indicator that it's time to jump out. So, if you're in a trade, like I am, for example, here's my trade, and if you have some targets, they can be moved further, which is actually what I plan to do in the coming days with my clients, and wait for the moment wave 4 correction starts, and then on the new low, set take profits accordingly and gradually close out your positions, meaning there are no signs of a reversal. If you're not in any trades, then just use any correction to join this downward move and basically make some money on it. Now, a bit about another part. How do we know that the current third wave is ending and a correction is starting? Well, for example, if you like that rule, buy back at the bottom, close your position, and once the correction is over, sell again on that correction. So, we have pitchforks drawn here. These are trend pitchforks. And the rules of the third wave state that within wave 3, we should develop inside these pitchforks, within the trend set. As soon as the price goes outside of them, in that case, we're talking about a reversal. Here, I also want to draw your attention to the fact that you can use internal labeling, where a five-wave move should also be formed. And basically, by switching from the hourly, say from the 4-hour to the hourly chart, within the smaller divergences, you can also time your exit correctly. But most importantly, our fourth wave will move outside of those boundaries. And that way, we can use pitchforks to determine both the targets for wave 4 and basically the place where you can short again if, say, you want to make a series of trades. So, from the current setup with a target of 75.39, I plan to move the profit to around 61 and then follow it until a reversal signal appears. The third point, and the third way to see where a stop is possible, meaning which level should work out, for this, we need to go to the American market, to the NYMX exchange, where futures are traded, specifically crude oil. And here I'll draw your attention to a very interesting fact. In the American market, especially the futures market, the concept of closing gaps works very well. Meaning, if a gap was formed, it's always closed. And this happens in a certain proportion, during the development of the next cycle. First, the markup, which I've actually recreated identically here so that there's an understanding of what we're dealing with. This is a 5-wave move down, and the gap that was formed here in March, well, late February or March of 2026, is at the 67 level. So the price is 75 now, and 67 is the gap. But at the same time, in terms of the markup, if we're gonna act on it and returning to the pitchforks again, we're still only forming the third move. So we'll close the gap, we'll enter a correction, and then we'll form another decline. And actually, returning to our higher time frame chart, just so there's, an understanding of what we'll discuss in future videos when you come to watch, and if you're not subscribed, be sure to subscribe. The gray scenario. And this gray scenario becomes relevant if we pass the accumulation zone, meaning below 70 for Brent, and in the case of WTI, that's a consolidation below 67. So in this case, yeah, when we're talking about the risk of breaking the previous low, which shouldn't be broken in the case of a triangle, the gray scenario will be realized. Meaning in this case, we could go well below 50 to the 40 and 35 levels. But I'll emphasize, for now, this is a distant scenario, and maybe 2 or 3 months we'll definitely discuss it again. Right now, it's about using short trades from any correction and making money on that. No buying back, no attempts at a reversal, trying to catch it just to supposedly buy as cheap as possible at the bottom and wait for the highs. No, don't rush. Right now, at this moment, this is the main scenario. I've been saying this for probably the last 3 or 4 months that there was, will be, and continues to be a serious drop that we need to profit from. The next day will come with new targets, and we'll definitely make money on those too. Accordingly, any updates regarding oil, I'll definitely post them in the Telegram channel. If you're interested, subscribe. The link is under this video. Updates come there every day for various assets. We'll be able to make money together. That's all for me. Bye.